Good morning. What's up, guys? Welcome to a new week. It's Monday. Hope you guys are all rested up because we have work to do here this week. Speaking of which, business first, as is usual. And then we'll get into chit-chatting here. So, news, pretty bare, actually, this morning. Press secretary from the White House spoke at 7:30, Central Time, that is. 11:30, there's a Trump lunch listed on the news for whatever reason. Trump is meeting with the House Speaker at 1 o'clock. Trump speaks at 3, and then Trump signs some executive orders at 4. That's all Central Time, and all of those news headlines are outside of the stream hours. So we're actually free, clear, clean. We can trade to our heart's desire here today. Now, market inertia, which we need to touch on, obviously. Bottom of your screen there. We've been seeing a lot of range days, at least we were. Maybe like a week and a half heading into the week and a half prior to like maybe Thursday's stream. And now I gotta tell you, we may be leaning into a little bit of a shift of potential trend continuation days during the New York session. That's showing just the New York session only. So we'll see if that continues here. But again, as always, I like to go into the day with some kind of bias, not directionally. I think that's a big mistake. I don't care which way it goes, but some kind of volatility bias so I'm not sitting here banging my head against the wall, making big, outsized continuation bets when we've been seeing really tight, range-bound markets. And vice versa. I wouldn't necessarily want to sit here and take a whole bunch of channel scalp bets when we've been seeing big, huge trend days. Okay, now a lot of times, most of the time, it's going to be somewhere in the middle where you can kind of do both, but I still want to have some kind of bias so I can, because I really think the biggest way that people end up losing is they don't adjust to market conditions quickly enough. If it takes a week, not only is that opportunity cost of time you could have actually had an edge and been making some money, but you're giving back to the market that whole week, so it's kind of like a double whammy. You don't want to be in that position. You want to be able to adjust to new conditions within like a day or two max. Okay, so got to understand what the market inertia is doing. And speaking of which, we're about flat. We're up 27, 25 points here coming into the open. So hopefully that break-even point on the Nasdaq won't be too big of a deal here today. It has been the last 3 weeks. That break-even point on the Nasdaq, that has been a problem. Meaning the market has kind of gotten hung up there quite a bit, but hopefully we get free and clear of that. Again, whichever direction, I don't care, but as soon as possible. All right, good morning, guys. What's up? How we doing? Dale, Chris, what's going on? Rick, Mitz, Melissa, TC, Peter. What's up, guys? How you all doing? Keith, welcome back. Josh. Patel, old school. Pat, Bigfoot, welcome back. Bigfoot, how you doing? Maury, welcome back. Pat, first time here, should be fun. Used your scalp strategy pre-market, up 898. That was awesome. Cool, man. Let's keep it rocking here after the opening bell. Again, after the bell, I like to let institutional orders clear for at least a few minutes, maybe 10 minutes, and then let the traders come in and get their, maybe 30% of market volatility, or market participation, I should say. Whereas right off the open, it's going to be, honestly, if I had to guess, total guess, by the way, probably 95% institutions and algos. I'm not really into that. So it's really it's really hard to find edge in that environment. Scott, Christian, how you guys doing? Old school. Nico, I took a couple of your setups during London and they worked out well. Cool. Good to work. Jay Cotto, good morning. Trick Biscuit, what's up? Welcome back. Adrian, welcome back. What's up? Jim, how you doing? Good morning from Nashville. Good morning. All right, getting a little bit of a pullback here coming into the bell. We are 90 seconds out from the beginning of the week. Almost feels like we're on the trading floor, huh? Scrumptious, good morning. Shado, what's up? Good morning. Bricko. Clinton, how you guys doing? So listen, I imagine we're going to see the market have to make a decision here around break even in, I'd say, the 15 minutes after the open. Hopefully we get a relatively wide 15-minute opening range. But when you open right next to the break-even point, like we are right now, again, we're within 20 points of the break-even point. The market tends to stick to that. So I'm really hoping we don't. I hope we just make a decision, go, and off to the races and leave the break-even point behind. Because what happens a lot is, you know, let's talk Central Time, 9:15, 9:30, 9:45, the market returns to that break-even point after some volatility off the open, and it sticks there for like 20 minutes. And that has been frustrating as of late. We've been able to do well, but that's been a frustrating thing that's happened a lot here because the market just cannot make a decision which way to go. So the earlier we can make that decision, the better. V Gibbs, what's up? Welcome back. All right, 10 seconds here until the opening bell. Let's see what we get. There's a 2-minute chart, by the way, that you're looking at. There it is. Testing the 2-minute. I'm sorry, testing the 20 EMA on the 5-minute, which is top left of your screen there. Nia, good morning. Scooby-Doo, welcome back, brother. How you doing? And there it is. There's the break-even point. 0% on the day, essentially. Get this market making a decision. And I don't mind which way it goes, as long as we go some way. So again, if you are just joining us here, I'm coming into today with my bias. I don't like to go, well, I'm real bullish today or I'm real bearish today, because I just don't care. My bias is always going to be a volatility bias. So I'm coming into today, again, if you're just joining us, with a range-bound bias, knowing that there is a probability that we are now shifting to more of a trend bias. We look at the daily chart, right, bottom of your screen, we're seeing that. Last couple of weeks, a lot of range days. Last 2 trading days, though, Thursday and Friday, we saw a little bit more success in widening out that range. Let these institutional orders clear. They are taking it higher. There is the high. But this opening bar range so far, not all that large. We're talking 45 points. Less. When you see the open is not volatile compared to really what it should be, that always tends to make me a little bit nervous. So you see a 43.5 point range on that first bar. You can see that at the bottom of this chart here. That shows you the range of the bar, whereas the blue line, that's the average range of the last 10 2-minute bars. So right now it's going to be low because pre-market, right? The lower volatility in pre-market, it's still factoring those in. It makes me a little nervous when that first bar, the first couple bars, are low volatility, like less than 50. But we saw this on, I believe it was Friday. We saw this exact scenario where we had the same conversation, and then it turned out that the volatility actually stuck around. It was a lot more sticky than usual. Whereas, you know, sometimes if you get like an 80-point range right off the open, by 9:15 it can be 15 points, 20 points, which that kind of sucks. But what we saw on Friday was, you know, I forget the actual numbers, but it was maybe like a 50-point range off the open, 40-point range off the open, and it stuck around, you know, 25, 30, 35-point ranges really through the entire stream, which was cool. So, oh, by the way, update on Friday. So I left stream on Friday. I think I was down what, 250 bucks, 300 bucks. It was essentially break even. We had one losing trade, one winning trade, and that was the end of the stream. The third trade, by the way, was in that 3-hour video we uploaded Friday for the weekend. I think it was one of the last trades in that video. Correct me if I'm wrong. But I took one more trade last Friday, ended the day up like a little under $1,000 bucks. So it was a small, modest green day, but it was a green day, which was fun. So again, I really hate that mentality. Like, I need to be green heading into the weekend. If I'm red heading into the weekend, I'm not going to have a good weekend. But there was a trade, put it on, happened to be a winner. Cool. Leave for the weekend. That was it. So let's see if we can get a little bit more than a modest day here to kick off this week. Again, if you are just joining us, news-wise, we're pretty much free and clear for the entire stream. There's nothing going on, just some Trump stuff this afternoon. So we can trade without any risk of scheduled news, at least, during the stream. But we're always keeping an eye out for unscheduled, kind of random tariff news. Look at this dump off here now off the open, heading through about 35, 40 points in the red. See if this market can decide. Again, you look at this 5-minute chart, top left of your screen. It looks to me like we may be putting in a little bit of a range. So if we could break that, I think that would be, you know, I don't mind trading the range, but to get a quicker setup, usually continuation is going to develop a little bit faster off the open for me than a channel. Because for a channel, I need 3 after the open touch points, and that usually takes a little bit longer. But what I was saying, unscheduled tariff news, random tariff news is always a concern. So make sure today, please, that, you know, you're using, ideally, live stop orders. Unless you're someone who trades naked really wide. Okay, so we've seen, you know, 200, 300, 400 point bars on unscheduled random tariff news. Now, the market's not always that touchy, but right now it is. So I think having live risk management is very key here. Otherwise, you could trade well all day. Boom, the timing. You get the timing, bad luck on a scalp, maybe late afternoon. It goes 400 points against you. You're not managing risk with a live stop order. And that can ruin your whole day. So we want to see that. All right, a lot of wiki back and forth here. Market trying to push lower, but again, this is mostly still institutional orders. We're only 6 minutes into the day. And the deeper we get, the heavier the ratio becomes actual traders. Though still, even at best, traders are going to make up maybe 30% of volume. But right now, we're going to be 80, 90, 95% algos, institutions, making orders. Not necessarily even based on today, by the way. It's going to be mostly based on days, weeks, maybe months out. Which kind of messes up any mentality we could have here. Primary concern here right now is just getting away from that break-even point, which really, top left 5-minute chart again, means breaking out of this obvious channel that might be forming here. Now, again, these are pre-market levels, so these aren't levels that I would trade just because they're based on a small sample size, and now the sample size has blown up, inflated. Now the bell has, you know, the market's open now, right? So with the break-even point on the day inside of that channel, I'd really prefer to see a breakout of that. Chris, did your balance issue of your prop accounts get fixed? Yeah, so I had a balance problem in my Take Profit Trader accounts. I logged in one morning last week and I did all the math. Payouts that I had taken, I removed, and I was like, okay, money I made this week, payouts that I took this week, what should be left? And there was quite a bit of money just missing, just boom, gone, vanished. And it didn't make any sense. And it's not, I'm not misunderstanding anything. It was simply, there's obviously an error. So it's a little frustrating. I haven't heard back from Take Profit Trader, but obviously, you know, it's really only been one business day. And most of Thursday for that issue was wasted with a rep who I don't think cared. But hopefully I'll get somebody who actually opens the file and looks at what's going on. And I get that money, because I will. I'm not worried about getting the money. It's just a matter of, I don't like when these problems are drawn out. Especially when it's such an obvious problem. So yeah, I'll get it fixed. Hope it just doesn't take too long. But, you know, interestingly, I was talking about this last week. I was a little like, my thought process was, you know, I don't really want to trade more days in those accounts. I don't want to take more payouts, because then when they look back at the numbers, it's just going to make everything more confusing, because I've made more money in the accounts now. I've taken payouts out now, and now they have to look way back and do more math. And I don't want it to be any more confusing than it needs to be, but I'm trying to get that fixed. But I've traded now, I think, 2 days in those accounts. I was green both days in those accounts that I traded, and I took, I think, 1 payout per account since I had that issue. So whatever rep I get is gonna have to do a little math, but hopefully they can figure it out. It's not too complicated. What's up, guys? Welcome back. Pupple, good morning. How you doing? All right, we are heading in now to 840 territory. Which, you guys know, for me, 840 to 845 is typically when I start. If we have news at 845, then maybe I'll push to 850 or so before I start. But there's none of that here today. So 840, 845 is kind of my zone to really start looking for setups, because that's when the institutional orders have mostly cleared and we're kind of good to go. Now, the range here on these bars up top is kind of in the 30s, 40s right now, which is not bad. It's not incredibly high. It's a little bit low, so I'm hoping that we see the volatility, the range, kind of stick there. Again, my sweet spot for range on a 2-minute bar is going to be somewhere between 25 and 70 points. Above that, it starts to get too volatile. I end up getting kind of chopped. Below that, the trades, I'm making too big of an ask at that 40-point risk, 40-point reward ratio. Okay, so 25 to 70 is a great place to sit. Lately, we've been on the lower end of that range, but that's okay. Hi, I'm always talking Central Time here. The futures market is going to be, well, really the hub. It's going to be based out of Chicago, so we're talking Central. Yeah, you see how these bars, guys, it's just a lot of wicks, then you get this big, massive green bar. This is institutions here. It's really, really tough to have edge in this first 10-minute environment. But we are now into 840 territory, so we can begin looking for clean setups here. I would need it to be nice and clean. Now, clearly, what's going on, at least to kick off the day, you look at the 5-minute chart, top left of your screen. We are putting in that channel, that little ascending support level. Now, if we can get a couple more touch points here, post opening bell, all of a sudden, boom, that becomes a huge channel of interest for me to take some scalps on. But we'll see if we can get that going here. I'm not a huge fan of waiting, you know, off the open for channel scalps to develop. Again, I'd prefer to start the day with a continuation or two, just because channel scalps, they take longer to develop. You have to see it, you know, come down, test, bounce at least 2 times, if not 3, which takes time to do it right, at least. So let's see if we can maybe get a little bit of continuation setting up for us inside of that channel. Well, here is the push to the top end of that little ascending resistance that we put in pre-market. Let's see if the opening bell traders, if the New York session traders respect that level at all. Rufio, good morning. How you doing? All right, there's the push. That's the test of the ascending resistance again that we put in pre-market. That's a pretty fair test there, so let's see if that ends up meaning anything. You can get a better look here on the 5-minute chart. There's the test right there. If we can see a nice push upside through, we could lead right into continuation, though these bars are very, very outsized. We got to be careful. Now, that first kind of setting bar, that big green bar, when I look at this setup, I start thinking, well, technically these bull bars are shrinking, right? Which means the buyers are, in this sequence, technically losing steam. Now, when I look at a continuation setup, like a 3 consecutive bar continuation setup, I prefer to see equal size or growing, ideally, bars. But when you get a huge outsized setting bar like that first bar, it gets tough. We have 50 seconds until the close of this 2-minute bar. It's not off the table yet for me here, because we have now broken through that pre-market ascending resistance, but I gotta watch. I would really need to see a nice clean close out of this 2-minute bar. 35 seconds till the close here. Here's all the looks. All right, 10 seconds. Sellers have wicked this back down quite a bit. That's not clean at all. Okay, no setup there on the rollover. Now, for those of you guys who are a little bit newer, had we seen that 2-minute bar close at or very near the high, it would have had to have been very clean. I would have bought the rollover of the bar, and if you don't know what the rollover is, it's just the close of one 2-minute bar to the open of the next 2-minute bar. That's it. That's all the rollover is. So had we seen a close at or near the high of that 2-minute bar, I would have bought the rollover because it's the most recent information on, hey, what's the balance here between the buyers and sellers? The sellers wicking that back down at that very moment come in and say, okay, well, you know, it's not necessarily as strong as you'd like it to be to take a trade. Now, again, probability-wise, the best you're going to get in the futures market, it is rather efficiently priced. On a 1-to-1 reward to risk, obviously, you know, adjust for the same percent edge with different reward to risks. But to keep the numbers simple, 1-to-1 reward to risk, the best probability you're ever going to get is between 55 and 60%. Okay, at least for trades that happen on a regular basis. Now, maybe you can get 70% on a trade that happens once a year, but I'm not interested in that. I want trades that can present themselves every day. So same idea here, 40 seconds out until the close of this 2-minute bar. Again, I would need it to be very, very clean. We're clear of Friday's New York session high. 12 seconds out here. Let's see if the bulls can clean this up. Again, sellers wicking this way back down beneath that previous bar's wick top. Obviously, that all tells a very important story. There's the rollover, nothing there. If you guys haven't yet, please, yes, press like on the stream. Helps out a ton. You have no idea. Appreciate you doing so. All right, bear, you guys see here, those turned into shrinking bull bodies. So the bears are trying to trigger some kind of reversal sequence. This is one of those scenarios that we talk about all the time, where, you know, if you're somebody who trades a low probability, really high reward to risk, there's a lot of ways to find your edge. There's not one way. It's a ridiculous teaching point that I think gets passed around so much. Like, you have to trade 5-to-1 reward to risk or you're not going to make any money. I mean, this is like 4th grade math, and that is completely misunderstanding the math. So if you're somebody who's like, well, I'll take lower probability trades, maybe they only have a 30% probability of working, but the reward to risk is quite a bit higher. You know, you can go, I don't know, maybe closer to 2-to-1, or even a little bit more. There we go, look at that. But that is one of those scenarios where if you were to sell the shrinking bull body on this bar, lower probability setup, okay, compared to like what you see me take, but the reward to risk is higher. At least the potential reward to risk is quite a bit higher because probability is lower. It's always a trade-off. If you want more reward to risk, you're getting lower probability. If you want higher probability, you're getting lower reward to risk. And when it's all said and done, you want to just have a few percent edge. That's all you need. That's all you need, and you can do this for a living. Problem is, most people ignore that reality. That recent bar screams Quicksilver has joined. Yeah, I think Quicksilver just shorted, huh? Where is he today? Now, you guys know for reversal sequences, if I'm going to go continuation on a reversal, I need at least 3 consecutive bars. Now, if I'm going with the trend continuation, 2 consecutive is plenty. But 3 is always better than 2. And again, when you're going reversal, probability is a little lower, so I need 3. This would be the second. There's the test of the 20 EMA on the 2-minute chart. By the way, the 20 EMA on the 5 is down at 19,540. Okay, so 15 points out. Yeah, kind of a 20-point difference between those two. Obviously, the 20 EMA on the 5-minute carries a little bit more weight. Not a ton, but a little bit more just because it's more heavily watched. All right, now watching for a potential continuation entry bar here if we can get a nice low close out of a 3rd consecutive bear bar, but it would also, by the way, absolutely need to close well beneath 19,540. Otherwise, we're coming right into that 20 on the 5, which I'm not interested in shorting right at a potential psychological support. But if we can snap that up, then I'm into it. Minute 20 out here. The range so far on the daily, look, bottom of your screen, that range so far on today's New York session candle is pretty tight. So hopefully that widens up a little bit here. Well, bull's trying to wreck any downside continuation here, it seems. All right, here comes the rollover again. That 19,540 region is still a troublemaker. 20 EMA on the 5. Okay, so there's the rollover. There we go. There's the test of the 20 on the 5. Again, a nice low close out of a bear bar here, and I would put on continuation on the rollover. But it would need to be below, well below 19,540. More realistically, below 19,538. A minute 17 left on this 2-minute candle. All right, there's a push. That's good. All right, now calm down. I don't want to see this bar become too outsized, okay? That right there is pretty damn good. I don't want to see this grow much more at all. But I would like to see a nice low close here. 40 seconds out here from the close of this 2-minute. You can see we got the rollover on the 5-minute bar at 8:55 and then the push. All right, bears, calm down. Calm down. We got 18 seconds. Get a nice little close and I will sell this rollover here. Here comes the rollover, 3 seconds. All right, and I will get short on the rollover there. Average price 19,518.75. Stop loss. Make sure I'm all good. We're all good. Stop loss 19,558.75. Take profit down at 19,478.75. Currently a couple points in the money. Now that take profit down there is right through a downside push of the current intraday low, which is a stop hunting mentality, okay? I want to use, to get those last few points, if I could use some stops on a push through that low as liquidity to get me to my target, perfect. That would be beautiful, and that was, of course, thought of ahead of time because I know what I'm going in as far as a 40-point take profit before I hit my button. All right, 7 points in the money. See if we can push those intraday lows here. $10 points in the money. $20 points in the money, 25 points in the money, 30 points in the money. At the bottom of that wick, there's 19.5. That's going to be a tier 2 level. Not too concerned about it. Just need to see a push. A couple points, like 4 or 5 points down through that intraday low. A few stops getting taken out should push me to target here. 25 points in the money. There's the rollover. Nice low close out of that bear bar. 30 points in the money there, and we are out there. Just got to flatten one account. All right, and we are out there. Ooh, we actually didn't get great fills. Okay, so my typical trade should be a little over 2,000. At least right now with these ratios that I'm running. We actually got 1957.50. So not great fills, but a nice winner. It was a clean trade. Very clean trade. Just didn't get the best fills. Whether it was on probably the take profit because we got a huge wick downside. And obviously I'm using market orders on all the follower accounts. So we probably got a less than favorable fill on the take profit. But still up about 2,000 bucks so far on the day. 1957. Let's see what else we can grab here. You guys see that stop hunting mentality, right? When you take out the low, it pushed hard. Now, Granted, it was probably the cause of our less than favorable fill, but I'd rather take a not great fill in some of the accounts and just get hit out than, you know, not have enough liquidity to push downside. So that was a clean trade. Again, continuation plus that stop hunting mentality is a beautiful combination if you can get it right consistently. Doesn't mean they're all going to be winners, by the way, but they don't have to be. They don't have to be. With 120, if you can win 55, 60% plus, you're making lots of money. So let's see what else we can get here. Now, these bars are starting to become a little bit outsized, which I got to tell you, taking a big old bet on outsized bars outside of the range with market inertia of, yeah, we're ranging with the potential of breakout. That's a little bit of a tall order. So I want to see how this develops here. But decent way to start out the week. Let's see what else we can tack on. Look at this, bear's pushing, huh? Nice big push. These are outsized bars, okay? So the bigger these bars get in comparison to what we've seen, in comparison to the day's range so far, obviously you have to remember, the more you're tempting that kind of snapback, that rubber band snapback mentality out of the bulls. If we were in a big, huge, volatile, range-bound market, I mean, 100 points in the red on the day, 90 points in the red on the day would not be causing bulls to step in and buy. They just wouldn't have any confidence. But we're in a little bit more of a range-bound market, so you have to keep that in mind. When you get big outsized bear bars, obviously we're leaning toward the sell side. But you want to keep in mind that, like, hey, maybe the deeper we go here, the more bulls will get some kind of confidence that, you know, we're in a range-bound market, this is kind of an outsized move, let me step in and buy. And I think that's what you're seeing here as the bulls try to wick this back up. Now, are they going to be successful? That's the question. We'll see. But while this works itself out, I will be back in a couple of minutes. All right, good. Looks like I didn't miss much, huh? We basically got an attempt at a little bit of continuation out of the bulls, but really no continuation setup out of the bulls here. Just a successful reversal sequence. Now testing the 20 EMA on the 2 minute and the 20 EMA on the 5. We'll see if they can make something of that or if they end up just getting rejected here. If the if the bulls do get rejected here off of the EMAs or volume weighted average price or whatever you want to look at in this mid-range and end up fading back downside, all of a sudden, guess what? Now we're looking at a potential descending support, which is really a channel, which is range bound. One sec. All right, well, here is the test of the 20 on the 2 now, also the 20 on the 5. Those are starting to line up. You guys remember the 20 EMAs across the 2 minute and the 5 minute were about 20 points apart. They're now like 5 points apart. So those are coming together, which makes them, in my head, hold a little bit more water. We'll see what the bulls can do around this region. Bumble, do you have a favorite trading or psychology book? Yeah, you know, honestly, I think I'd be lying to you if I said I did. Not really. Almost all of my learning has just been through trying to figure it out. I've read plenty of books, yeah, but I don't know. V Gibbs, just finished another 150k eval. Let's go. Feeling like Quicksilver today. So, you know, now that I think about this, I've read not all, but a lot of the popular trading books. And the conclusion that I kind of came to for me is this. Look at them as slightly more favorable forms of entertainment. But in reality, the way that you're going to make trading work is you need to understand, what are you after? You're not after money. You're after a statistical edge, which equals money. If you have no edge and you skipped right to, well, I want money, how are you going to get the money? You have no edge. You're opening a casino, but then offering games that have no math built in. Why would you do that? You'll be out of business in a week. So you have to understand first what you're after, then figure out, okay, well, how am I going to find that? That's the setups. You guys see the setups that I trade are relatively simple, though there is discretionary aspects to it. I'm not going to pretend like it's so simple. But the more you guys, I think, watch me do what I do, I think the more understandable it becomes. That's how you find an edge. It does not have to be complicated. It can be as simple or as complicated as you want it to be, finding the edge. And then it's just a matter of exploiting the edge through sample size and not giving it away in the meantime. So it's a balance, right? You don't want to take... Let's say you find edge at 1 trade a day. Fine. Like, I want to scale that, right? You know, the casino doesn't stop dealing you blackjack. They're trying to scale their sample size of hands. So it's like, well, I need to scale my sample size of hands, which is take more trades. But if you start taking 25 trades a day and they're not good setups, you've now given the edge away. But if you're taking 8 trades a day and they're all good setups, you should do that. If you're taking 30 trades a day and they're all good setups, you should do that. But never just take trades for the sake of beefing up the sample size. when you're letting the quality backslide below what has edge. Very important. If you can understand all of that, and there's a little bit of nuance in like, okay, what product am I trading? You know, understanding that in small cap momentum stocks, they're not efficiently priced. When a news headline hits, no one knows if the thing is worth $3 a share or 30. You can take advantage of that because people make really bad decisions. In futures, it's very efficiently priced. We all kind of know what it's worth at this very moment, give or take, so it's harder to find edge. So you trade it a little differently. Maybe you trade it with a little more of that, you know, continuation and then reversion in channels. You don't want to bet on huge breakouts when you're at the top of a clear channel. There's negative expected value there because it's priced efficiently and everyone's looking at the same chart. All the algorithms see it. The fact that the chances that you're going to be right are about 20%, right? Because we know that about 80% of breakout attempts in an average market fail, and that's higher in range markets. So listen, all that to say, books are great. You should read the trading books. I think it puts you in the right mindset, but nothing replaces funding a futures account with $1,000, trading one micro, creating discipline, not moving stops, testing setups. Nothing replaces that. The problem with a lot of books, it's a lot of theory, which you need theory. You have to have the theory behind your plan. But in reality, you read these books and at the end of it, you're like, I didn't learn really anything about how to actually do this. I just learned a lot about the mindset and I was entertained along the way, right? I mean, again, books are great. You should read the books, but it's not going to replace screen time. Okay, well, the bulls are, honestly, they're having some trouble here around that 20 EMA on both the 5 and the 2 minute. Hopefully we can see a break one way or the other here, because not only is volatility coming in a little bit now, we're seeing like the mid-20s now per bar as far as points, but also we're 25 points away from that break-even point on the day, so let's see if we can fix this. And yeah, you know what? I would say that I've benefited from trading psychology content, whether it be books, articles, whatever. And it's important to understand how important that is, which is why I've preached trading psychology and you know, emotion always loses, that kind of thing for years. Over 4 years now, I've preached that same thing because it's very important. However, the way that you fix that is not flipping some kind of switch in your brain. I've been very transparent about this. The way that you fix that is by having so much undeniable data that you are who you think you are as far as a trader is concerned, that it fixes itself. Emotions are very difficult to control long term, but you can fix them by knowing for certain that when you look at numbers, which you can be sure do not lie, that, oh, this works. Oh, look at this. I had 3 losers in a row, but at the end of the month, I still made such and such amount of money, which is more than I would have made at my job. Okay, maybe I should go into the next month and not just quit because I had 3 losing days in a row. It flattens out that emotional curve just by having the data. The only way you get the data, by the way, trade small and put in the screen time. That's it. That's it. It's not hard. It just takes a little bit of time. It's probably less than you think, though. All right, you guys can see here, volatility's coming in. We're getting a lot of wiki kind of doji bars. Gotta see this break one way or the other. Flat top around 19,525. Yep, there's a flat top there. Sean, welcome back. Good morning. Doing well. 1 trade so far. And that's where we currently sit on the day so far. We got not great fills on that first trade, but we're currently up 1957. Looking to see what else we can tack on here. Fear and Greed Index just hit. Again, not that we can do much with that information, but it's interesting to look at. It's 39 out of 100 right now, so that is sitting in fear. Last week, I think that was in extreme fear. Joel, that 19,500 level is trying to act like it's a tier 1 level or something. Yeah, I think this is more about really the 5-minute 20 EMA, but more importantly, the break-even point on the day. I think that's more what this is about. And that 19.5 is conveniently there as like a potential support level. But again, that's a tier 2 level. It's not that big of a deal. So let's see if the bears can take this lower. Honestly, I'd be happy to take bearish continuation down through, like through this region. Stop hunt here, looking at target somewhere on this descending support. Rightish. Nope, good morning, Nico. Do you usually set a 20% stop loss? No, right now I'm using, my ratio, I'm using 40-point stops, 40-point take profits across the board. Now, as volatility comes down, you guys will see the more likely I am to manage the profit side a little early. I'm not afraid of negative reward to risk. Win rate just has to be higher. It's just a math problem. It's not right or wrong. It's no better, no worse than someone running, 2-to-1 reward to risk with a lower win rate. That's no better, it's no worse, it's just different, which is a huge mistake. A lot of people don't understand that math can work both ways, a lot of different ways, right? But again, a lot of you guys are newer, so briefly, I'll keep this brief, but if you've spent a lot of your trading career thus far doing what everybody on the internet tells you to do because it's marketable, go big reward to risk because it sounds good, it gets views, right? You can risk $100 to make 500? Ah, shit, I want to do that, right? It's, I think, leading people to slaughter. Because guess what? What they don't tell you is probability just tanked. Best case scenario, your probability is 22%. So now you're losing a whole hell of a lot of trades back to back to back to back, loss, which still works, by the way. If you have edge, it can still work. The problem is people don't like to lose 3, 4, 8 trades in a row waiting for that winner to come, and they quit trading. Because that sucks. That's not fun. Now, at the end of the day, listen, I'm more than anyone. We're not here to have fun. We're here to make money. But it's really easy to quit when you show up every day and lose because you're going huge reward to risk because that's what whoever told you to do told you. I think that's a mistake for beginners. Put yourself in the driver's seat, even if it means going negative reward to risk and just trying to have a higher win rate. Doesn't mean you're giving away edge. It just means that your losers are going to be larger and you're going to win a higher percentage of the time. Now work on developing an actual statistical edge where you make money over time doing that. You'll stick with it when you're winning more often. Or go 1-to-1. 1-to-1 is a great place to sit also. Terry, well, I'd be interested to see your math on that. You say 1-to-1 is better for compound growth. It could be. It could be. I would disagree. I would say that it's not better, it's just different. Again, if you have edge, having edge is better for compound growth. Well, this market's getting stuck right here, right about 20 points out of break even on the day. Again, we also have this flat top, attempting to break that through now. Vinny, 2 to 3 or 1.5 R has been my sweet spot. Yeah, listen, it's a great place to sit. Only you guys can decide, hey, what would be best for my psychology? I know that for me, if I was just starting trading, and someone on YouTube said, yeah, go 10 to 1 reward to risk $100 to make 1,000. That would sound really, really appealing. But you have to understand, how do we make money? This is a calculation. Reward to risk, not literally, but reward to risk multiplied by probability. Okay, equals edge or flat or no edge, negative expected value. Now, if you're going 10 to 1 reward to risk, guess what happens to probability? If you're new and you have no edge, it's probably 9% probability that you hit take profit. 10% break even about. 11% if you have a little edge. Now, when you lose 90% of your trades going huge reward to risk, can you make money doing that? Of course you can, if you have edge. Okay, but are you going to get to the point where you're making money? When you've lost your 22nd trade in a row, and are you going to keep going? You're going to keep banging your head against the wall? Probably not. Probably not. Now, you should understand that, you could make money doing that, but this is more about like, okay, how can I just keep my psychology as in tune as possible to get me to keep going to actually realize the edge? Now, if you're someone who's like, man, I hate losing, but I gotta tell you, if I do lose, I don't really care how much I lose. I just hate the concept of being wrong. Maybe lean into that. Maybe go negative reward to risk and just accept that, if you go 1 to 3 reward to risk, you might risk $300 to make 100. And then you have a high win rate, which everyone misses. Everyone assumes that you win 50%. They're like, how do you make money doing that? Because you have a higher win rate. Okay, lean into what your personality type will most agree with. That'll keep you in the game enough to start getting it right. That's the secret. Well, we are still in this range here. I'm staring at this market. Believe me, I'm watching to see if we can get something. But we got to break one way or the other here. Market is sticking to this EMA / flat top / kind of break even point on the day for the Nasdaq. So we'll see if we can get a break. Kings, Nico, if you're trading with 1K, would you still run a 40-point stop trading one contract? That's $80 risk of trade on the stop. That's a personal decision. Kings, here's the reality. The industry standard for risk per trade is 1%. Now, 2 to 3% is where people push if they're trading more aggressively. Less than that is usually reserved for people who are being a lot more conservative, or your later years as you near retirement and you're trading with a lot more money. But the futures market gets different because you don't need to be above PDT. So a lot of people, guys, in the futures market, since you can trade, as long as you have the margin to cover your trade, you can trade with any amount of money. It doesn't have to be over 25,000, which is a beautiful part of the futures market. I always say the futures market is like America. They let you do what you want. Okay, so the stock market, there's arbitrary rules, PDT, which I can't stand. But Kings, what a lot of people do when they trade futures is they'll have trading money and they keep it like in their bank or in a separate bank account. And then they have a smaller percentage of that capital actually in their brokerage account. And then they risk, well over 2 to 3% per trade, but it's still within that maybe 1 to 2% risk per trade of their total capital that they're like, okay, this is what I could trade with. That's very common because you don't need all that money sitting in the brokerage. All it does is open you up to black swan risk. It opens you up to going on tilt, maybe, if that's something you're concerned with doing. So you protect your capital by having it not immediately at the market's disposal, off to the side. And then, yeah, technically in your brokerage account, you're risking more than 1, 2, or 3% per trade. But again, what you should really do, that's a very personal decision as to how aggressive you want to be. What you should really do is go to a website called coda.io, coda.io. Type in Actually, just type in on Google coda.io equity curve calculator. I don't even know who made the website. I have zero affiliation. It's a cool tool. And figure out the probability of going bust with different risks per trade at different stats, win rate, reward to risk. Figure out what your stats are and then run simulations on that website, and it'll tell you the probability of going bust with certain, and then, you know, what you do is you figure out, okay, how aggressive do I want to trade based on those probabilities? That's how you do it. That's the answer. If someone sat here and said, oh, you should risk this amount per trade with this amount of money, they're lying to your ass. It's such a personal, there's so many factors that go into it. All right, bears are trying to take this thing lower. Let's see if they can here. We gotta break out of this little sideways channel. And then we can start grabbing a setup here. Now, we are 60 seconds out from this bar. Now, this bar does have me interested, I gotta tell you, for some continuation. It's coming a little bit outsized, but that's okay. Low of day is about 19,432-ish. We're getting close. Now, I would look at that as a stop hunting mentality. We're 20 seconds out here. If the bulls can keep it low, but I don't want that bar growing too much more. Okay, but if we can get a nice low close here in the next 12 seconds, then I will look to sell the rollover if we can get a nice low close. A little bit of a wick. I'm going to leave that alone. You guys see we got that wick back upside kind of at the last second. That was just barely, you know, honestly, a few ticks lower, a couple points lower, I for sure would have put that on. I got to leave that alone. It's just not really there. That would be a real break for me. I know that, so I got to leave that alone. It's really unfortunate. I'm kind of sad that didn't give me a nice low close, because what happened there is the bulls kind of stepped in the last 15 seconds and wicked that back up, which changes the buyer-seller relationship in the current moment, right? Now, the reason I'm sad that didn't give me a close is look at this 2 minute. Had that given me a nice low close, not only do I have this as a stop hunting mentality, like that first trade, to push me through deeper into the money if we could test that and break that, but also there's plenty of room on any descending resistance at all that the buyers could make an argument for. Because, I mean, you could see, if we look at this view, this would push way lower and give me plenty of room after we stop hunt that to hit the target. That was like kind of the perfect zone to give me a good entry. It didn't give it to me, so you got to hold off. TC, how near, this is the discretionary stuff that I talk about. How near the low of the candle is your tolerance? Couple points. For me, it's just discretionary. It's visual, based on the sequence itself. Honestly, it's the best way I can describe it. I don't have robotic rules around that. It's not like, okay, it's, 4% of the candle size. It's discretionary. But you guys have seen me take enough setups at this point where I think you kind of understand what I'm looking at. It also, by the way, depends on if we're in like the last 3 seconds of a bar and we get an aggressive wick upside, but it's still small. I also have to take into consideration, well, how aggressive was the move? How quickly did the wick up happen? I will give the wick more tolerance if it happens very slowly, if that makes sense. Do you have a video on demand, a VOD, where you go over channel scalping? Yeah, I have some older videos, I think, but I should update these. I will. I'll get some updated educational stuff going out. Have you ever tried the opening range breakout? Not directly, but I've taken plenty of opening range breakouts with my own setups, the continuation setups. But we had this conversation last week. I think it's irresponsible to just say I'm going to trade the opening range breakout all the time. And if it works for you, by the way, great. I'm just speaking my truth. If someone's trying to bet on the opening range break every day, well, that works in breakout markets, but in trend, really, really tight channel markets, that's going to fail. So I think more importantly, it's important to see and make adjustments based on the market inertia. What's the market condition? Again, that's a great setup in certain markets in my experience. But for me, it's a little more nuanced than just, just trade the orb. I think that's a little too simple for my taste. Not to say that my setups are so complex, by the way. You guys see they're relatively simple. Scooby. Coffee black. Just black. Range breakers. Got it. Can you be fully systematic and walk away then? You mean anybody or me personally? All right, we're retesting the 20 on the 5 and that flat top that we saw kind of around 19,525. Yeah, range for my entries, no. As far as being fully systematic, I could probably have a team write an algorithm that matches my discretionary style, but I don't think I want that. I don't know. I don't think it would perform as well as I just can manually, and plus, I mean, when there's issues, when there's little nuanced things, I want to be able to see that. Algo trading is great if you don't like trading. I love trading, so I'll hold on as long as I can. All right, we're 10 points out here from the break-even point on the day. As far as Nasdaq, right? You guys remember on Friday, we had this, oh man, we were in a trade on Friday. It ended up taking, I look back at the footage, that was like a 35, maybe 40-minute long trade. Probably the longest trade we've had in recent memory. And it was because we had a little flat top like this, 5 points ahead of take profit. Interesting trade on Friday. But we're seeing this again here. We're just not in anything this time. Yeah, Terry, correct. We're coming right into the 20 EMA on the 5-minute, not to mention that flat top. If we can see the bulls break through both of those things, though, then bull continuation is 100% on the table. Any one of these bars could be an entry bar here for me if we could see a nice push through both of those problems. You see right here on the 5-minute, See, we're getting hung up right at that 20 EMA. All right, minute 50 out here from the close of this 2-minute bar. Again, any of these 2 minutes, if we can get a nice high close, ideally just above 19,540. That'd be a beautiful entry here for me. Jeff, I don't understand how algo trading can work. For example, the other day when it blew through your take profit, it could have easily gone the other way. If you aren't monitoring, your accounts are blown. Yeah, listen, it's with algo trading, you have to have many safeguards in place. Far more than I think I could easily program. I can program, but I'm not like some whiz developer at all. So I don't think I could put in enough safeguards that could perform as well as myself just sitting here. But again, some people hate sitting at the screen, believe it or not. Like, we're all psychos and we want to sit here all day, but a lot of people hate sitting at the screen, but they still want to trade. And if that aligns with, you know, they're also like a great developer, then they end up being a good algo trader. I think for most people, it's going to underperform what you could do. It's attractive, by the way, to algo trade because it makes the decisions and you take emotions out of the equation. But if you can just get enough data that shows you, hey, you know, the more you trade, you perform well, the emotions kind of fade anyway. All right, here's another test of that flat top. If you had to pick one single setup, what would it be? Well, all right, I'm gonna give you the real answer, and then I'll give you like the real answer. The no BS answer would be I'd probably select continuation here in futures. However, the real answer to that, which is a little more of a BS answer, is I think having one is a little bit irresponsible because if the market shifts, one can stop working, and then you need another different kind of setup. Right? There's range markets and there's trend markets. You kind of want to have a range setup at least, and a trend setup. And maybe if there's different applications for each setup, like you can take continuation in a range day if the range is wide enough, which is why I would take that one because it has more applications, I think. You see, this flat top is really becoming an issue. This market is not liking the flat. This is very reminiscent of Friday. Except on Friday, we were long, 5 points away from our 40-point take profit for 25 minutes while this worked itself out. Again, these flat tops, they tend to eventually try to snap up. I see we have some new people here, by the way. Welcome. One trade so far on the day. This is where we currently sit. We're up 1,957. Yep, 1957 on the day. That's where we stand currently. Trying to see what else we can tack on here. But this flat top here is causing an issue. This market needs to see a push through. Obviously, here's where we're looking. This region. These flat tops are notoriously weak, however. There's the attempt at the push. Exploit the vibe. I've been studying so many different strategies and backtesting all of them, and I keep coming back to see these continuation trades. They work if you utilize them right. And if you have a discretion that aligns with the setup, which I guess can't be understated. All right, well, there's a nice close outside of that little flat top region. Let's see if the bulls can get some kind of continuation. By the way, a nice growing bull bar, closing obviously well above here if it's growing, at the high of the bar will be a long entry for me. But right now we are dealing with the break-even point on the day. You see that there? We're pretty much break-even on the day, the Nasdaq is. And for the last 3 weeks, that has been something to watch because the market gets hung up in that region. There it is, 0% on the day. Right there, flat on the day is the Nasdaq. Again, any nice little growing bull bar, not little, but any nice growing bull bar that is not outsized, closing at its high, is an entry for me. So we have 26 seconds left on this bar, though this one is not really growing. It's actually a shrinking body, which I'm not a fan of. Turning kind of into a doji here. There's the rollover. Little back test of that flat top is not uncommon. It's actually very, very common. When you finally see a push through a level, getting a little back test is a very common thing to see. The result of that back test, by the way, probability shifts back down to about 50-50 in my experience, maybe slightly weighted on the hold. Again, if you're just joining us here, news is pretty much clean for the day as far as scheduled news, but always keep an eye out right now in this hot market for unscheduled random tariff news hitting. So you want to run live stop orders. Ideally, we've seen 2, 3, 4, 500-point candles out of nowhere. You don't want to trade all day for one little error in timing, not your fault, by the way, to ruin the day. Vinny, do you take pullbacks in continuation structures? It's kind of a trick question because you've seen that in some not quite as strong continuation trades, you guys see I'll give it, depending on the quality, 15 or 30 seconds on the rollover for an entry. And what I'm doing is I'm waiting for a little bit of a pullback. So, kind of, but probably not in the way that you're asking. All right, here's the retest here of that flat top. Market struggling to make a decision. Also, by the way, still at that break-even point on the day for the Nasdaq. Jonas, new to the stream. Can you explain your strategy in 2 quick sentences? Oh, well. Might take a few more than 2. Let me keep it brief. With the trend, I'm looking for 2 to 3 consecutive bull or bear bars, whatever the trend might be, with my entry bar growing or a similar size, closing at or near the high, and then I buy or sell the rollover. There's of course also nuance with, are we coming into a potential range, in which case I wouldn't take it. There's a stop hunting mentality to that adds to setups if I can get it. And then in channels, I don't bet on breakouts in channels. At the edges of channels, I should say. I take channel scalps. Kind of a buy low, sell high mentality inside of a channel. Whereas the continuation is more of a buy high, sell higher, sell low, sell lower. Or sell low, buy back lower. All right, we are struggling with that 5-minute 20 EMA. Yeah, Jonas, best way I think for all you guys who are a little bit newer to understand is to, honestly, the best way to understand would be I just uploaded a 3-hour long compilation of all my trades for the last couple weeks, or maybe week and a half, 2 weeks. That would probably be the best way to understand it, or just watch the stream. All right, let's see if the bears can push this down lower. And I would, by the way, have a stop hunting mentality in this region. It is a bit wide. It's about almost 15 points wide, but it's there. But again, since we're not really going with trend, I would need to see a 3rd bar here, which means in 65 seconds, this bar will roll over. And then that next bar could be an entry if this one closes clean. Now, obviously, you guys can see here, just look at the chart, right? What are the bulls hoping for? Well, they're hoping we get a little ascending support forming. Now, let's see if the bears can kind of shoot that hope down. Again, if I'm going to sell continuation on this next bar, I want the bulls to have as little hope as possible at that very moment. My entry moment, right? All right, now let's see if the bears can push this low and get an equal size. Since this bar is a little larger, ideally equal size, not growing massively. Close down in this region, but see if they can outshine the bulls here. Give that to me. There's some real sideways action here, huh? What are you guys trading, by the way? We didn't talk about that. What are you guys trading to start out the week? You doing evals, funded, or personal? Curious where you guys all sit. A couple weeks ago, everyone was in evals, then all of a sudden, everyone was funded. Eric trading some evals. JM personal, Brandon evals, JPAs, Ken both, cool. PG, good morning, been your sub for years, first time joining you since this new show, unfortunately. seeming very flat and can't see a trade. On days like this, do you hang out or walk away and fight another day? I hang out, but I only put on my A, well, really A plus setups. A setups, I'll say. Give it a little bit of wiggle room, but not much. Chad, evals. Jay Cotto just passed last week. Cool, good work. Rick's trading both. Vinny personal. Savon eval. Mitz evals. Ooh, guys, Rufio's funded. Day trade Tom's in an eval. Ooh, guys, we got a big old mix. A lot of evals, a lot of funded, a lot of personal. All right, let's see. You guys see the Bears trying to push this lower here. Chris got quite a few evals with the code BIG last week. Trading one, though, with 1 micro. There you go, sizing down. He's learning. Bumpo, would you trade differently if there was no trailing drawdown? You know, not entirely, honestly, no. A few of my funded Apex accounts currently are actually the 100K static accounts. Now, you guys see I trade them along with all the other accounts, though hang on, there is a slight difference. What you could look to do if you wanted in a personal account or a static drawdown account with some buffer, which these have plenty of buffer. What you could do is go low probability, meaning you take one contract, whether it's a mini or a micro, however big your buffer is, and then you have a stop, whether maybe it's 40 points or 20 points or whatever. Once you get into the money, you start adding. Okay, you're betting on big trends. Now, this would have to be a trend environment, but you would start adding and moving your stop to break even. Now, since you're not dealing with trailing drawdown, getting stopped out at break even constantly doesn't really hurt you aside from commissions. And what you would end up with, the curve would end up looking something like this. You'd have your normal amount of straight up losers with one contract. You'd have a ton of stop outs at break even, and you'd have a very few massive winners that you add into with like 5, 10, 15 plus contracts that are huge winners. Okay, now, granted, you're gonna have to deal with some rule finessing, not finessing, but like you're gonna have to deal with the rules like at Apex if you end up going that way. It might take you longer to get payouts because those wins are gonna come less often, and you have to have like, you know, your days of $50 profits to get payouts. So honestly, no, I trade just the same way. A lot of ways to trade, though. That's just one of many, many, many ways. Kenny up 655 on day one of my new Take Profit Trader eval account. First account with them. People have good experiences with them. Yeah, my experiences with Take Profit has been fantastic. I'm currently I have one issue where there's some money missing from my accounts that should be in there, but is missing. It's not more than payouts I've taken, by the way. There's just money poof, vanished, missing. So I'm waiting on, that's the only problem I've had. I'm waiting on support to get back to me to fix that up. But I still love Take Profit. The daily payout structure is fantastic. Which, by the way, Take Profit is 30% off and no activation fee, which is a very big deal. It makes it so much more inexpensive with no activation fee, but you got to use code BIG, B-I-G, best deal always. All right, now you guys see here, right? Let's look at this 2-minute here. Let's do this. Let's get rid of this. I like to clean up my charts along the way. You guys know I don't like sloppy charts. We know that bulls are paying attention, at least somewhat, to that. Don't overthink the line. Just draw it how you think most people would draw it. We know bulls are watching that. Okay, now if the bears can break downside through, all of a sudden we have a beauty of a potential continuation setup. But I know that for now, the bulls are going to pay attention to that. Vinny Wrench with a funded account. Do you trigger a taxable event after the trade or only on the payout? Probably a good time to pop that up, huh? I'm not an accountant, nor do I claim to be. However, most prop firms are going to treat you as an independent contractor, which means on the payout. But talk to your accountant. I'm not that guy. Oh, you see these bulls here still testing that little ascending support. Now you can see this is a very common occurrence, guys. We come into a little trend line like this that's had just barely its 3 touch points, and then volatility kind of dies as you make the test. This is very common. You just got to let it work itself out. If it breaks downside through, then boom. At least 2 consecutive bars turns into continuation for me. But a big bounce up out of the hole, ideally up toward at least this high, and then a retest becomes a channel scalp for me. You know, I just realized I've had 0 coffee all morning. I look over and this is sitting in where my mug goes. Be right back. 2 minutes. What a beauty of a break, huh? All right, we got 25 seconds until the rollover here. We get a clean close, I will take this. 15 seconds out. But I don't want to see it grow too much more. All right, stay put. Stay put, Bears. There's the rollover, and I will get short right there. Average price 19,438 and a quarter. Stop up at 19,478 and a quarter. Take profit down at 19,398 and a quarter. Let's see if we can get the Bears pushing this down. Currently sitting about 8-10 points in the red. Good fills. Well, I don't know about the fills, but we're all set for quantity in all the accounts. Break even on the trade right now. Five points in the green. See if we can get a nice low push into low of day. Here's pretty much the test of low of day. Just looking, we took out a few of those stops already. I understand that. See if we can get a nice little push though, going lower and lower. 10 points in the green. $20 points in the green. There's a nice push, huh? Again, take profit down at 19,398 and a quarter. That 19,400 level. That is a tier 3 level. I'm not too concerned about that on its own. $25 points in the money. Ooh, it's hot. Bulls trying to take this a little bit higher. Still about 12 points in the green. Ninja, that continuation short just got my first eval passed. Cool, good work. Good work. Now, take it easy, trade small, and be consistent in the funded account. And you'll hit payout territory before you know it. All right, we're still, there we go, 30 points in the green, 10 more points, and we'll hit take profit down at 19,398 and a quarter. Just need to see a little bit of a push down through 19.4. That's a tier 3 level. Again, not too concerned about it as support, but maybe a couple of stops just to push me about a point or two into the money if we can see a break of 19.4. Not quite enough. We got within 1 point. I'm sorry, within 2 points of my take profit. Bulls trying to bounce this baby. Oh, Bears step back in, make him lose 19.4. Well, back to break even on the trade here now. We were 37, 38 points in the money there at best with a 40-point take profit. Now, it's really easy to look back and say, oh, shit, I should have just taken it. Don't do that. You do that too consistently, you give away any edge. So many people do that. You give away your edge on a silver platter. You're doing nothing more than protecting your emotions. So bulls are trying to create a little bit of a reversal sequence here. Let's see if the bears can shut that down, take us down, lose 19-4, and hit me out at target. 5 points in the money. Few points in the red, break even-ish on the trade. Superfly got a better fill than me. Already got 40 points and out. Cool, man. Good work. Yeah, my fill put my take profit down at 19,398 and a quarter. So that's what we're looking at here. Again, stop up at 19,478 and a quarter. And at our best point so far in the position, we were 2 points away from our take profit. But that's okay. Let's see what we can do here. So this is what we're looking like here. Take a look. You can see how close we were, right? Again, just need to see the bears shut this down, take us down, and give up 19-4. Again, 19-4, it's really easy to look at that and say, oh man, you should have taken that. That's a tier 3 level. Okay, that's not a level that I can just start taking orders off at. We are currently now about 17 points, 15 points in the red. See if the bears can shut down any hope that these bulls have at a continuation reversal sequence. Well, back to green on the trade. We're about 5 points, 8 points in the green. $15 points in the green. Come on, bears, just take out that 19-4, and we are home free. Couple points in the green here. Really a beauty of a setup when we did take it. Right here is our entry. This roll over here is our entry for the short side. Again, if you're just joining us here at our best point so far on the trade, we were 2 points out from getting hit at take profit. But discipline's important. Can't just start taking things because you feel like it. If you start letting hindsight control your future decisions, you're in trouble. All right, we are 15 points in the green. ATR is fine. ATR is at 31.5. All right, 20 points in the green. Again, take profit at 19,398 and a quarter. So let's see if the bears can, or if the bulls, I suppose, will give up 19-4. They give us a couple of points down through our target, enough to get us fills. Now, if ATR were collapsing, I would be thinking about early management, but it's not. ATR is actually holding, so I gotta let this work. No reason for me to manage early here, at least not yet. All right, a little less than 10 more points. Little break in 19.4. Come on, Bears, take it through 19.4. Oh, we are right there. There's a little bit of a break. We got within a tick or two of my take profit. Look at this. Look at this. Look at how close that wick got. One more little test down through 19.4. Scooby, you're thinking in terms of one trade. You gotta think in terms of all the trades. Still in the trade here. Again, take profit, 19,398 and a quarter. $30 points in the green. Come on, just need a little bit better test through. Need 2 more points. Well, we are seeing some buyers step in a little bit ahead of 19.4, but listen, it's a tier 3 level. Need about 8 more points here. Yeah, this is how close we've been. Just a tick or two out a couple of times. But there's no reason to manage early. That's an emotional call. There we are. We are out there and fully flat. All right, finally hit our take profit there. And there we go. So that's where we currently sit. That's 2 trades so far on the day, 2 winners. And we are up $4,176.50 so far here on the day. Let's see what else we can grab. Oh, you guys see how that falls out? It always seems to work that way, right? Takes forever to hit your take profit, then the bottom falls out as soon as it does. Total fallacy, but it feels real. All right, now clean slate, fresh eyes. Let's see if this market gives us any other kind of setup here. Antonio, hi, new to the channel. Welcome, brother. Good to have you. How do you set stop loss and take profit? So right here in NinjaTrader, it's called an ATM strategy. It goes out automatically upon entry. See this big outsized bar? It's a pretty large bar. Now, we'll watch how this develops here. You guys know what I'm watching here, right? I'm looking for another continuation, however. I know that we're going to have some hopeful bulls. Now, this is ugly. This is not a level that I would take. Looking at this, I'm not even going to draw it because it's so aggressive. But I know that some bulls are going to be looking at that as because we've kind of been respecting more or less getting bounces in that region up until this point. Cameron, up 2K on the day, walking away. Great trading as always. Cool, man. Good work. Yeah, Zachary, I'm looking for another short continuation, but I have to consider that aggressive descending support because I know that some bulls are holding out hope. I want to see that get a few more tests. Maury, I'm done for the day after that beauty of a trade. All right, brother, we'll see you tomorrow. As for me, I'm not done. I gotta sit and keep looking what the market gives us. So we have a lot of newer people here today, by the way. Appreciate you joining us live every day, every single morning, 8:15 a.m. Central. So I hope to see you guys become regulars in the chat. Still getting pushes downside, but I can see that some bulls are trying to step in at that aggressive descending support. By the way, far too aggressive for me to ever think about taking a long there. The more aggressive levels get here, the less strength they tend to carry. See, we're getting these wicks. That's bulls trying to step in and buy the lows. Now, just for context here, the low of Friday's New York session was 19,233.75. Okay, so we still got about 130 points until we test that low. D, first time seeing you. Do you have a paid Discord? Nope, not these days. The stream is free. That's it. That's it. I do a little bit of one-on-one stuff, but I'm not really taking anybody on. You have to be a really good fit for that, and I'm not really taking anyone on again. The best thing you can do is use code BIG, which gives you a deal anyway. Nico, is there a reason why you have more Apex accounts than Take Profit? Yes, because Apex maxes you out at 20 accounts. Take Profit maxes you out at just 5. Which you guys see, we'll see those getting maxed out here at some point. Nico, what's up, Nico? Alright, we're still getting pushes downside here. Still, eyes on the same thing. Because, listen, guys, I would imagine when you see trend days like this, we've talked about this a lot. When you get these aggressive moves, you have to be a little bit careful. Okay, because if you have any ounce, any thought that, hey, bulls might see some kind of aggressive descending support, oftentimes what you'll get is you'll get a nice relief bounce, and then it widens out and turns into a channel. Okay, we've seen that so many times. It happens all the time. But if you just see continued pushes downside past any hope that the bulls could have, then that turns again into continuation. So that's what I'm watching here. Bruce, up 433. All honesty, I did not hold. Took profit about 5 points before target. Total up 1,300 on the day. 4 days of 200 plus. Need one more 200 day for a payout. Love this group. Well, we love having you. And listen, guys, if it's your strategy to take profits a little earlier and maybe not be as, like, disciplined about not taking things early unless there's a reason to than me, that's fine. Trade if discretion in that regard works for you, fine. But at the end of the day, the data is going to tell you the truth. If it's working and you have edge, don't let anyone tell you it's not. People lie, numbers don't. But I know that for me, I have to let things work unless there's a clear reason within my rules to manage early, which is going to be based on usually collapsing volatility. Yeah, Bruce. Nah, it was definitely emotional. Well, we got to work on that then. The longer you go, the less that becomes an issue, though. Okay, bulls attempting here to create A little bit of a reversal sequence, turning this into a doji. Again, this is one of those low probability, high potential reward to risk setups for bulls. So we'll see if they can pull it together. 2 minutes, I'll be right back. All right, we are back. And nothing happened. Bull's still trying to create a little reversal sequence here. You can see those shrinking bear bars. Again, low probability, high reward to risk setup for bulls. If you guys are low probability, high reward to risk traders, that's not me though. So waiting to see what we can get. How are you guys doing so far today? Hope you guys are doing well, green. But I'm not just asking about the P&L, it's separate. A huge thing, guys. I've said this so many times in the past, but a lot of you guys are newer, so I'll repeat myself briefly. Please, do everything in your power. Do not, I'm telling you, I've been there, it's not worth it. Do not derive your self-worth from your P&L. It's miserable. Don't do that. Just show up, do your job, derive your self-worth as far as your work, your trading is concerned, from how well you do your job and follow the plan that you laid out for yourself. That's where you should derive your net worth. The result, it's silly. It's irrelevant to try to tell yourself if you're good or not based on whether you're red or green, because the result is out of your control. But if you have statistical edge, the midterm result and the long-term result is 100% in your control, and you already know what it's going to be if you have edge. So derive your worth not from your day-to-day performance. Derive your self-worth from your day-to-day ability to remain disciplined and follow your plan and have edge, even if you're red. Very important. The best way to have a miserable life as a trader, which is the opposite of what we're trying to do here. You're not doing this to be more miserable. The quickest way to do that is to say, I hate myself on red days, and I love myself on green days. Not enjoyable. Scooby, I'm doing really great, and so is my P&L. My metal band played a good show last weekend and hung out with my friends all weekend after that. Cool, man. Exposed, staying focused, doing better than a few weeks ago, that's for sure. Good. Dave, my short-term P&L is ugly. My yearly is great. Always look at the bigger picture, 100%. Yeah, if you want to judge your performance, look at the month. Look at the year. Really. Ken, nice 5-2 Green Day for me. I'm sim now, just hanging with you, learning a lot. From you and loving it. Cool, Ken. Glad to have you, brother. Marshall, doing well today. Much more patient as I listen to you each day. Cool, guys. Good to have you guys. Scott, what's up? How you doing? I'm 9,500 across accounts. Cool, man. Good work. Good work. AC, you know you're secure in your strategy and edge when you can lose a trade and red on a day and feel confident about going straight back to it the next day without second guessing yourself. 100%. The more you do that, the more secure you become. The more confidence you have, the better you perform. The less roller coaster-esque this life is, which you don't want it to be. It's roller coaster enough to be a trader. What's up, Poppy? How you doing? Prop firm Poppy is in the house. So just sitting here, if we end up seeing this channel widen out and turn into a channel, then I'll channel scalp this. But also still looking for a good continuation as long as it has room. Cheto, are you big on journaling your trades? Yes. Yes, yes. Admittedly, it's more automated than it used to be. I used to use a pen and paper. Write down emotional state, all that. How I felt in the trade. Hey, was it like the last trade that we had, or it takes some time to hit profit? How did I feel while that was happening? It's a good way to fill the time in between trades, keep you more patient, and gives you a way to measure your progress. But now I just do it digitally. Just import them into software, and then I look at the data. Now you get these little bounces here, right? These little relief bounces, then the test of lows. For continuation, there has to be enough room before any kind of argument that the bulls could have to buy. Okay, so that's really what I'm watching. Jonas, what do you use to journal your trades now? What software? I've always used TraderView. That's always what I've used. I think TraderView is kind of like the OG. I've just always used that. It's always been good to me. But there's a lot of options. They're all pretty similar. By the way, I have zero affiliation with TraderView. I pay for it. But it's not VIEW, it's VUE. Maybe I shouldn't pay for it. They want to hit me up. How is your reviewing process of your journals? What do you look for? I just look at my data. I look at, okay, I know what the reward to risk is going to be, so I'm really looking at my win rate. How's my win rate holding up hour by day? Am I performing better certain hours? If I trade the afternoon, is my afternoon performance deteriorating? Am I actually going negative expected value in the afternoon? Things like that. That's what I need to know. But I know that I perform better in the morning session than the afternoon, like most people do. But if I still have edge in the afternoon, in the current market environment, I will trade the afternoon, not every day. But when I do that, I tell you guys on the stream the next day, like I did on Friday. Plus that third trade I took was actually in the video. Oh, you see the bulls here trying to trigger reversal. Scooby-Doo. Another good psychological strategy if you're up after multiple trades, 4,200 bucks plus now. I'm up a little bit under 4,200 actually. It's time to take a walk and reduce the dopamine. Yeah, listen, I think that's really helpful, especially in the early years. I don't know. Obviously, I'm sure there's some there for me, but that response has faded a lot for me. We've talked about this a lot. I just, the more you trade, guys, the more data you have, I think just the less you care, because you just do your job and you know what you get when you do your job over time. So if I'm green today, great. If I'm red today, fine. If I'm break even, fine. Again, it's not like I feel exactly the same on a red day versus a green day. But I don't think, it's been a while since my brain was flooded with dopamine on a green day. It's been a minute since that's happened. But that's a good thing. Nico, I just have to say thank you. You've made me a better trader. I passed my first eval account on Friday. Cool. And I'm now trading my first PA. And I'm up right now thanks to you. You did it, not me. Good work. Good work. Keep it up. Stay disciplined. Trade small. And I bet you'll be in payout territory before you know it. It's cool to see how many people are getting funded and doing well in their funded accounts. Pumple, would you enter long if this current bar goes green and it's bigger than the previous one? Well, if that 20 EMA was not right in the way, my answer would be yes. However, we're looking at the 20 EMA being right in the way, so I'd have to revisit that when we see that setup. Session, appreciate it. You being here. Hope to see you become a regular in the chat. We got lots of regulars. I recognize just about everyone's name here every day. It's cool to have you guys each day. What's up, Gaines? As you guys can see here, we're coming right into the 20 on the 2. Yeah, Pumple, there would have to be kind of a sweet spot where we've cleared the 20 EMA on the 2, but there's enough room before the 20 EMA on the 5. So that's what I'm thinking about. It would be tight for a 40-point take profit. It would certainly be tight. But I'm watching to see if we get that. Taz, what's up, buddy? Scared to trade today? Made 500 bucks, but now sitting on my hands. Yeah, listen, if you guys have the issue, which is very common, where you're green, and now you have the problem where you're like, well, there's still good setups. I should probably still be trading, but I'm scared now. I don't want to give it back. Size way down. 20% of your regular size. Size way down if you can, if there's enough room for you based on your, original main size. Size way down. Go 20% of your main size. And then just put on good setups. Kind of break that ice of trading while you're green. Eventually, you'll get over it more and more. But there's nothing wrong with sizing down in the afternoon. I size down in the afternoon all the time. Just because I know that I don't perform quite as well in the afternoon, but I do have some edge in the afternoon, so I'll size down. Well, we're kind of sitting here right ahead of that 20 EMA on the 2-minute. Glad the market finally picked a direction here. We're no longer at the break-even point. Obviously down about 0.75% on the day, the Nasdaq is. Mark, same with when you're in the red, size down on a losing streak. Yeah, if you're not seeing the market properly, you're really struggling. There's nothing wrong with sizing down, primarily for your psychology or to fix the way you're seeing the market. And then you can size back up. Again, guys, the biggest problem people I think tend to have is they're trading a certain way that doesn't align with the current market environment. So they're taking big breakout bets in a range market, or they're trying to scalp channels in a huge volatile breakout market. The quicker you can recognize what kind of market you're in, what the market inertia is, bottom of your screen, like we talk about at the beginning of every stream, right? The quicker you can recognize that, the less you'll give back and the less opportunity cost there is for you to actually make money because you're now trading in alignment with what the market's doing. All right, ATR, you're gonna see that blue flag. ATR is now sitting at 26, starting to fade a little bit, but still within my region. Again, 25 to 70 is my ideal zone for the ATR, but certainly in the low end of that. All right, Bruce, have a good one. Just a reminder, guys, this afternoon, by the way, again, we have Trump is meeting with the House Speaker at 1. Trump is speaking at 3. This is all Central Time, by the way. And signing executive orders at 4. So just be careful if you're planning to trade this afternoon. But I'm still watching here. You can see that we're, just like we talked about earlier, we got that downside move, and now we're starting to, we saw a relief bounce. We literally just talked about this. And then maybe we'll see a widening out and a channel formation that we can take little channel reversion scalps inside of. What's up, Tubed Out? Welcome. Welcome back. You're late today. What's up? All right, Bear is pushing this baby lower. Tube, do you have a good memory, man? Yeah, I recognize all you guys that are regulars, for real. Having a good month trading wise. Good work. Bull's trying to bounce this baby. We could get a nice, clean, growing bear bar closing at the low. 60 seconds out. Let's see if we can get a clean one. 30 seconds. All right, you guys can see here, the bulls are turning this bar into a doji. Not really giving us what we need here. Again, had that third bar, that last one that turned into a doji, had that grown. We saw a growing bear body closing at or near the low. That would have been a beautiful continuation setup to take out these lows here and use those lows as stop loss hunting liquidity, right, to help push us to target. But the bulls stepped in, turned that back into a doji. Dude, this is absolutely a battle. The bears are trying to take it lower. The bulls keep wicking it back up inside of the wick. The wicks, I should say, of those previous two bars. This all tells a story of the relationship between buyers and sellers. Cheesehead, what's up? Welcome back. Sorry I had to step away for a bit. Are you in a trade now? No, we're not in a trade right now, but this is where we currently sit on the day. 2 trades so far today, both of which happen to be winners, so we're up 41.76. Little under 4,200 bucks. So far. Old school. Hey, Nico, with Apex 5-1, risk to reward. If I take a trade with a $50 stop and a $10 take profit and close the trade for a $5 profit, does that break a rule? Yes. Yes, if the rep you get looks and decides that you broke that rule, which basically would mean, have you taken any stop outs at 50? Or they might just look at where the live order was. You don't want to mess with that. Now, old school, a tip. You need to leave room for slippage and fees, because if you're running a $50 stop and a $10 take profit, you're already maxed out before slippage and fees. So I think the max you should go negative reward to risk with Apex is 1 to 4. You guys see here this continuation bar potentially. Let's see if we can get that. The setup here is a little bit wicky. So I know that the bounce isn't quite in the favor of the sellers as you might want on a continuation with a stop hunting mentality. Yeah, you can see those bulls stepping in. This balance is a little more evenly weighted than we would prefer. Dantar, can you explain drawdown like I'm a 3rd grader? All right, here. Let's say you start with 10 fruit snacks, but you can never pull back 4 fruit snacks or more from your high. And let's say you walk around the room, you do some deals, and you are at 13 fruit snacks. Okay? You do a couple more deals. Oh, but someone was better than you. You lost your ass. Now you're at 8 fruit snacks. What was your trailing drawdown at? It was at 9 from the high, right? Because you can't go down any more than 4 fruit snacks below your high. So it was at 9, you're at 8, you failed. But if you pulled on back to 11 fruit snacks from a high of 13, then you push back up to 14, now your drawdown's at 10 fruit snacks. That's trailing drawdown. Offensive. Wait a sec. So if you market close a trade in profit when it goes against you, and the ratio of your stop loss to realized is less than 5-to-1, you're in violation? No, it's just what you intended to take, which is why it's a little bit up to the rep who decides on whether or not you get your payout, so you don't want to give them any reason not to. So if you have set orders, just make sure that you're not going less, or I should say more, well, let's say less than 1-to-4 reward to risk. So then you're leaving room for slippage and commissions. Mitch, my goal is $100 with 1 micro, just hit 99. So now just demo trading. Thanks for your show. This information is helping a lot. Good to hear it. See you join us daily. All right, guys, still watching here. It looks to me like we're getting a channel developing, but I need to see my 3 touch points. So that's what I'm watching for. Been following you for a long time, but new to futures. Is it best to trail your stop when there are drawdown concerns? Okay, this is a common argument, and I will tell you the reality of the situation. Here's the truth. It's just a math question. There's no better or worse. When you this has been back tested extensively, not just by me, but by like all traders ever. Trailing yourself out doesn't make it better or worse. In most cases, it just changes the data. So what happens is your win rate falls. Okay. Well, what happens is you end up with less big normal sized losers, but you're also going to end up with more like break even or small red or small green stop outs. Okay, so it just changes the data. It doesn't necessarily make it better or worse. I don't run trailing stops even in prop with trailing drawdown. What's the primary thing you're thinking about to filter out trades on every single strong bar close? There's a lot of them, but you don't take many trades. There's a lot of strong bars, but there's not a lot of sequences. So with trend, I need 2 consecutive equal size or growing bars. And against trend, I need at least 3. And then I need the entry bar to not be shrinking and closing at or near the high. Oh, and by the way, if there's a stop hunting mentality, even better. But if there's a potential range that I know the other side is looking at, then that's not good and I have to hold off. So it's a little more discretionary than I think it comes off as, but all right, let's see if we can get, you know, this channel here is a little tight. It doesn't leave a lot of room for continuation within the channel. But we are watching. If you're 1-to-1 and you take profit at less than 20%, does that break the apex rule? Yes, it does. Now, you have to understand that most of the apex reps are not going to look at one case. They're going to look at repeat behaviors. So, for example, if you get a rep who's just in a bad mood, they might deny you for one doing it once. But they understand that you might get a weird fill sometimes that leads you to break that rule on like big market volatility. But what they're really looking at is, are you constantly taking things off at 1-to-7 reward to risk, or 1-to-6, or 1-to-10? If you're doing that multiple times in one payout cycle, they're probably going to deny you. Okay, but if it happens one time on accident, it's not the end of the world. Just understand that they may decline your payout request. But they also might just approve it because they see what happened. Just don't do it on purpose all the time. But if it happens accidentally once or twice, just nothing you can do about it. Move on. But try to put yourself in a position where you're not breaking rules. Even on accident. Which, by the way, goes with, if you're stopping yourself out at break even, think about this. A lot of people like to stop out one tick in the green at break even to cover fees, which makes sense in a personal account, I guess. But you don't want to do that because that's going to show a whole lot of tiny, tiny winners compared to your risk when the Apex rep goes to approve your payout request. Don't give them any reason to. If you're going to stop out at break even, stop out truly at break even or slightly in the red. Don't give them any reason to say, hey, you broke rules. Nah, evals, they kind of let you do what you want at Apex. As long as you don't break the drawdown. This is mostly applicable to funded accounts. Well, market kind of trading sideways here again. Waiting to see. We get a bit of a channel development here. Alright, let's talk about levels here. So, look at the 2-minute chart. What I'm really looking at is we could make, I would call this 2 touch points. We could make this argument here. Okay, now on a retest, let's call it 19,380. Understand that if you look at the 5-minute chart, the 20 EMA is about at 19.4, so there is some room. You want to think about that as far as risk management. But I prefer 3 touch points, okay? Not to mention, we also have a potential flat bottom starting to form down here, which these tend to be notoriously slightly higher probability than 50-50 of breaking, okay? At least for a period of time. So, kind of what I'm currently watching. I want to see the 3 touch points up top if we could get it. Flat bottom's really coming into play, huh? So, okay, so ATR, by the way, is actually holding up. You guys remember just after the opening bell? So ATR is at 27. Just after the opening bell, we talked about how that first bar off the open, the 2-minute bar, had a 43 range. And we were talking about how, you know, that kind of makes me nervous, because if we end up seeing the range on these bars tank off to 11, you know, by 10 a.m., that's a problem. Okay, because well below 25 starts making my job a lot more difficult. But we've actually held up as far as range, and now ATR is at 28 after that last bar, which is good. By the way, tomorrow is a big earnings day. Whole lot of earnings hitting tomorrow. UPS, GM, Pfizer, Coca-Cola, PayPal. We also get JOLTS job openings, CB consumer confidence, Visa, Starbucks, all tomorrow. And then Wednesday, we get GDP, PCE, consumer spending, crude oil inventories. So pretty big news week. So make sure you're prepped for all that. Yeah, we have some interesting news pretty much every day except today this week. So I'll keep you guys updated on stream here as to each day as to what we're looking at, what time, what the forecast is, what the result is. So ideally you won't have to worry about it too much. All right, we got a nice breakdown through that flat bottom. Now we are testing the low of day. You guys see this here? Basically to a T, testing low of day. So, 2 trades so far here today. Again, this is where we currently sit. We're up 4,176 bucks across my 2 Take Profit Pros. What is that now? I think that's 8 Apex PA funded accounts. So you can see the breakdown on P&L by Apex versus Take Profit. So that's where we currently sit so far here today. Apex, by the way, currently 80% off. This is one of the better deals they run, and single day pass. Just use code BIG. BIG. By the way, if you're more into that daily payout structure, which Take Profit is fantastic for, you can take daily payouts, and it's in your bank. Once they approve it, it's in your bank within like minutes. Take Profit Trader, same code BIG, 30% off, no activation fee, which is a big deal. But all right, guys, you know what I'm looking at this point, right? So I appreciate you all tuning in. I will see you all back here at 8:15 a.m. Central Time tomorrow morning. If you're not subscribed to the channel yet, please do so. I'm live every single day, and I hope to see you become a regular in the chat. All right, guys, have a good one. I'll see you in the morning.